Whoa.
Are you ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknext.com and start your journey with Digital Investor today. The Circle IPO is actually an interesting place to start. I found a pretty cool article about that. Let's see what's going on. Hello. Yeah. They got a little bit more demand for that Circle IPO than they were originally thinking. So they bumped the price up. They bumped both the price up and the amount that they're selling. So actually, we'll go there first. Circle boosts their IPO amid stronger investor interest, eyes a $7.2 billion valuation. Whoa. So Circle is looking at $896 million from an updated IPO as institutional giants like BlackRock join the fray. So BlackRock apparently is going to buy up to 10% of the shares of this thing. They're gonna, I mean, BlackRock owns everything, God. But yeah, so that's gonna be pretty cool. For some detail, the company behind the USDC stablecoin has revised its IPO filing to reflect stronger than expected investor demand, which again is weird because I don't know what the upside is for those shares. If you're just going dollar for dollar, I don't know. It doesn't make a lot of sense to me why this would be something. It's kind of like, why would you invest in a stable coin? Okay, well, they're earning some yield against their reserves. Okay, but just go buy treasuries. If they're making money, if the stablecoin issuer is making money sitting in the treasury market, wouldn't you just be better served sitting in the treasury market? It's kind of the same thing with these Bitcoin treasury companies. Oh, you can buy into our Bitcoin treasury and you get exposure to Bitcoin. But I can just buy Bitcoin. Like, why do I need Michael Saylor to get Bitcoin? Well, because it's good. Michael, he's so. I don't know. Just to me, it's weird. But equity prices are kind of a derivative of the melt value of a company. They're not a direct ancillary, I guess. It's just an enthusiasm gauge. Anyway, so they revised their filing, Circle did, to, and this was January 2nd, so yesterday they did this filing with the SEC, but they updated the filing showing that they plan to issue 32 million Class A shares, up from 24 million. That's a big bump. It's an extra 8 mil. They also raised the proposed price range between 27 and 28 per share compared to 24 to 26, which is where they were. It's interesting. If the final pricing lands at the top end, Circle could raise up to $896 million, which is roughly 44% more than the original estimate of $624 million. Money, am I right? The adjustment would also push the company's valuation to approximately $7.2 billion on a fully diluted basis, up from the earlier $6 billion target. So that's pretty cool. The offering marks a key milestone for the company as it looks to strengthen its standing in the digital finance landscape. USDC, the only company that actually has dollars behind their stablecoin, Circle's flagship stablecoin, is the second largest dollar peg token globally, with a market cap exceeding $61 billion. The first largest is USDT, and it's not backed by shit. It's funny money. It's mostly bogus. It's probably 30 or 40%, backed by cash equivalents and securities. And that's giving them a lot. That's actually, it's probably nowhere close to that, but that's giving them a lot of credit. Bonjour. Yeah. So, why did Circle up their IPO? One might ask. Circle's decision to expand their IPO comes amid rising institutional interest in stablecoins and growing regulatory clarity. This is going to be the year of stablecoins, I bet. Especially when this Genius Act gets knocked across the finish line. Market analysts, be careful about those guys. They say the stablecoin sector, long considered a niche industry, is entering a new phase of mainstream relevance due to its rising adoption and trust beyond the crypto native crowd. So, well, yeah, and it was funny. You guys know who Paul Krugman is? He won a Nobel Prize in economics. And I've listened to him. He actually did a master class on economics, and I listened to it, and it was rational. And he comes out with this long thing the other day where he is crapping all over stablecoins. He's like, there's no point in stablecoins. I can just use my credit card. I can use my bank account. But banks themselves are using stablecoins because their own systems are cluttered, because it's more efficient. So if the banks choose to use stablecoins, Krugman, then why would we not also benefit? And so you read this, you just read, either he's just completely, like, they're giving him injections of like lobbyists like every night, or he's effing mad. Like he's lost his marbles. If you read his older stuff, this is a sharp dude. He won a Nobel Prize in economics. I'm pretty sure he did. And it wasn't like Bernanke, where Bernanke won a Nobel Prize for lying about what happened during the great financial crisis. It wasn't that. It was, he won a Nobel Prize for actually being smart, for being clever. And you know what? Bernanke used to be pretty genius himself. These guys, what it is when they get older, I guess they get cynical and senile and angry and bitter that they didn't, invest better. These guys must be so angry all the time. Like, I'm so intelligent on economics, and yet I have no money. Why don't you have any money? I don't invest because economics doesn't let you invest. You can know everything there is to know. You've read every book, you've consumed every piece of data available, every econometric model there is. You can absorb all of it. It means dick in investing markets. You don't know shit about investing if you understand economics. It's cool. You need to know, as a good investor, as a competent fiduciary, as a steward of capital, you need to understand economics. But economists are fucking idiots. They are the dumbest group of people you can put in a room. You put 10 economists in a room and show them where the door is, they'll trample each other trying to get out, and none of them will ever reach for the fucking handle of the door. They're so stupid. And it's mind-boggling. It's not. they basically have this resolve that their econometric models, which are based on whimsy and bullshit from 1963 anyway, but they believe this is it. And everything, any counterfactual, any data that said that otherwise, that's just got to be a lie. It just can't be true because I have my econometric models. It's very clear right here what I'm supposed to do. I have my Keynesian models. I know that if inflation is high, then I can just adjust an interest rate that affects a very tiny group of people, and that will change the entire planet. That will fix all that is wrong across the entire yield curve. Like, it's mind-boggling. Anyway, he doesn't understand stablecoins. He thinks they're stupid. I think he even said stupid. He goes, they're ridiculous. Like, what? Go look it up. If you guys want a good giggle, go look up Paul Krugman's statements about stablecoins. I think it was yesterday. Another substantial evidence of institutional interest in stablecoins that's not Paul Krugman is BlackRock, the world's largest asset manager. But I'm sure they're a bunch of idiots, right? Paul would say that they are idiots too. They are clearly dummies. Anyway, BlackRock, the biggest asset manager on planet Earth, is one of the largest potential buyers of Circle stock. So sources familiar with the matter are saying that BlackRock intends to purchase roughly 10% of the IPO shares. So if that plan materializes, it would further deepen the relationship between the two firms. You'd say, what relationship? Well, let me tell you. BlackRock already plays a pretty pivotal role in managing Circle's USDC reserves through the Circle Reserve Fund, which holds about 90% of the stablecoin's backing assets, because they actually have assets, unlike Tether, that are behind the token. So a stake in Circle would expose the asset manager to broader stablecoin market, to the broader kind of investable stablecoin market, and expand its interest in the crypto scene beyond ETFs. So again, you look at Tether, not allowed in the United States. Once the Genius Act passes, not allowed in Europe because you have to have competent reserves, which they don't. You have to have audited reserves, which they won't. They won't allow themselves to be audited. So, okay. You have Tether, which has over 100 billion Tether floating around. There's something like 100 and something billion Tether on Tron, right? Because all that money just showed up on the Tron network for stable coins, right? Like, God, man, when there's smoke, like, it's so stupid. Anyway, so, but you say, okay, if BlackRock has chosen Circle, they chose Bitcoin. You say, well, what do you mean chose? And like, well, there probably is no ETF right now without BlackRock. So BlackRock chose Bitcoin, and Bitcoin went from the 40,000 range, and now they're about 105, 110,000 range. Oh, interesting. Yeah, in about a year. And then they chose Ethereum, and Ethereum is starting to march, and some other things are coming for both Bitcoin and Ethereum on the ETF side that could be quite interesting. And if either one of them passes, I think on the Bitcoin side, it would be a little bit of a rally. On the Ethereum side, what would happen would be pretty dramatic. So let's see. Let's move on over to that. The SEC opens their. Ooh, I have an SEC picture. Let's see if I can put it. Yeah, SEC picture. Yeah. Look at us with the SEC picture. We're cool. We're cool as hell. Okay. What's going on with the SEC? Well, the Securities and Exchange Commission is facing criticism and confusion over its evolving approach to cryptocurrency regulation. However, the confusion that they're feeling, it's the people that have already left the SEC, is in you no longer work here, bye, and people that are on their way out of the SEC, like Crenshaw. So, yeah, the U.S. Securities and Exchange Commission is under renewed scrutiny by who? Following two key developments that signal a shifting stance in cryptocurrency regulation. The agency recently invited public feedback on a rule change that would allow in-kind redemptions for the Wisdom Tree Bitcoin Fund, while also releasing updated guidance suggesting certain crypto staking services might not be classified as securities, meaning Coinbase is off the hook, Kraken is off the hook, KuCoin is off the hook, Binance is off the hook, right? Meaning you could have staking potentially inside ETFs. So in-kind redemptions, meaning I can take Bitcoin and I can go into IBIT with it. I can swap into IBIT with it in kind, right? IBIT is the BlackRock ETF for Bitcoin. I could exit. I could leave IBIT and get paid in Bitcoin. I could take Bitcoin out. They would give me Bitcoin as part of my exit. So, which for tax reasons, that would be amazing, because then you'd have no tax burden. You could have gone, you could basically monetize your assets without having to borrow against them, although borrowing against them seems like a better way to do it. But that's just me. It's one guy talking. So that's in-kind redemptions. The idea behind staking is, if staking no longer creates a scenario where the token, the underlying asset, is a security, then you could have staking inside ETFs. Wouldn't that be interesting? And actually, you could probably have staking inside ETFs anyway, but we're well past the point where Ethereum would be ruled a security. So anyway, these moves have drawn sharp criticism from a small handful of people that mostly no one listens to, former SEC officials and a current commissioner, raising questions about legal consistency and the commission's evolving role in the digital asset oversight. You guys remember that guy Stark? Not Tony Stark, not the cool one. The douchebag, a former head of the SEC. He's been on the sidelines. He's like the Nouriel Rubini of ex-SEC guys. He's just Nouriel's actually shut the hell up, hasn't he? Where's that guy gone? Remember the same thing with Dave Ramsey. Do you guys see the video where Dave Ramsey was calling Bitcoin going to zero when it was at like $550? He's like, I'm sorry, you guys made a mistake. It's going to zero. You're going to lose all your money. You guys are foolish. Where's that jackass? Where's that broke jackass? And then Nouriel Rubini, who was anti-crypto, then pro-Bitcoin, then anti-Bitcoin. Well, he's pretty much shut his damn mouth because he has looked like a fool for a decade. So time tends to expose all of these creeps for who they are. Anyway, the SEC is seeking public input on in-kind redemptions for the Wisdom Tree Bitcoin ETF. And obviously that would extend out to other ETFs. But the SEC has launched a formal review process and is inviting public commentary. So you guys can go if you want. You can make some commentary, and you can make some commentary, right? If you want to, you can go and like write a whole thing. You can write a whole diatribe, a treatise, if you will. Anyway, inviting public commentary on whether to permit in-kind creations and redemptions for the Wisdom Tree Bitcoin Fund, which is the BTCW. I don't mess with that one because it's not all that liquid. But anyway, a spot Bitcoin exchange traded fund approved earlier this year. The move signals a potential shift in regulatory posture towards more flexible and crypto-native ETF structures. But for now, the agency is asking stakeholders to weigh in. So you get to write in and say, hey, Grant Cardone is now all in on Bitcoin. He was even at the convention. He's doing real estate projects. These guys are fucking Johnny-come-latelys. I mean, that's fine, whatever. They're all Johnny-come-latelys. They were all of these douchebags were shitting all over Bitcoin and just crypto in general for a decade. And now it's like 100K. They're like, well, we've looked like a fool for 15 years. It's time to turn this ship around. So you know what do I say to Grant? Better late than never. That guy's a real scumbag. I mean, like an awful husband type, philandering, whatever you want to call it, like a real scumbag. But he's not a crook, right? Like, he's not a crook. He's just he's a snake. Like if you go to dinner with him, you're gonna pay. He'll have lost his wallet or something. You know, like you know. Anyway, so we'll see. So the SEC is doing a call for public feedback. This was issued Monday, and it follows previous delays and all these kind of open-ended inquiries concerning in-kind redemptions for a number of major crypto funds. That includes BlackRock's iShares, Bitcoin Trust, which is IBIT. That's the most liquid of the ETFs. Van Eck has a Bitcoin Trust, and Van Eck also has an Ethereum Trust. So they're looking at in-kind redemptions across the whole kind of range of all these assets. No, I don't think so. I mean, Jeff and we message back and forth, but I think this is even Jeff kind of conceding that he has to have some digital asset content. But no, I reached out to him. We were going to do something, and then it just kind of never happened. And then he and Emil aren't working together, and now he's also working with Steve Van Meter, and Steve Van Meter's. I don't know, man. Do you guys know who he is? I just get this really uncomfortable feeling with this dude. I don't like, not like uncomfortable, like he's kind of inept and maybe a little pervy. I get a pervy vibe. Like if that guy showed up on To Catch a Predator, I would not be surprised. I'd be like, oh, that's Steve Van Meter. He's working with Jeff Snyder. So I don't know, man. When Jeff pivoted and went and pivoted away from Emil and kind of ponied up with, well, it was all the usual creeps, wasn't it? George Gammon, who's a fucking creep. Lynn Alden, who's cool, but she's the most brilliant, clueless person you'll ever meet. Like the person who understands the most about things and doesn't see the big picture. She understands the gears and has no clue how the watch works. She's just looking at the wrong information, and she draws the wrong conclusions. So George Gammon, Rebel Capital. George Gammon's a douchebag. Van Meter's kind of creepy. And Jeff kind of aligned himself with all of them. And at that point, we kind of stopped. Maybe we kind of stopped doing stuff together. So, and I've tried to get Emil a couple times, and he's like, I'm not doing any kind of stuff anymore. I think he might be a little bit, frustrated over the breakup. Perhaps we'll never know. Yeah, Steve's a little creepy. Anyway, just don't let him around your kids. I think you'll be fine. Don't take Steve Van Meter's advice about finance, because this is another thing. None of these people can invest. Like, they're not good at investing. Jeff is a great guy, and he understands markets. He is a terrible investor. Terrible. I mean, terrible. Steve Van Meter is awful. I mean, I don't even know that he understands markets. I think he understands macro, but he's just a terrible investor. And so this kind of goes back to the economist thing, right? You can be an incredible analyst and an incredible economist and not know shit about investing and never turn $1 into $2. They're going to work for the rest of their life. They're going to sell newsletters and shit. They're going to do commentary forever, but they'll never have a pot to piss in. None of them. At least Lynn Alden, she buys Bitcoin. She or he. I'm not sure if Lynn is a guy or not. And that's neither here nor there. Good for him, they, she, thee, whatever the fucking pronouns are. But at least them Alden, at least they buy Bitcoin and probably some Ethereum. Because I've heard her wax about Ethereum. So she's at least kind of, but George Gammon has always shit on crypto, like to the point of like laughing at it. Like, who's laughing now, motherfucker? Like, you were laughing at Bitcoin when it was 18,000. So did you take your money and go 5x it somewhere else, George? Fuck no, because you don't invest money. All you do is tell other people how to look at you don't even tell other people how to invest money. That's the problem. These dudes don't have any money. That's not a problem. It's just, it's different. If I'm going to get my advice from someone, I'm going to get my advice from someone that's investing, that's putting money in the market. Because if they're not, what on earth do they have to teach me? Nothing. They don't have any skin in the game. It's like all these TA guys on Twitter. Oh, the chart says this. Bitch, you don't even trade off your own information. None of it. At least that jackass James Wynn, who burnt over $100 million last week, well, at least he was investing. Now, does he know anything? No. Does he have any clue what he's looking at? No. Can he read charts? He can't even read his own watch, I bet you. But at least he was in the game. So we got to give him some props for that. Of course, he's an idiot, so he lost all his money. He lost many generations worth of wealth. I don't know. I think you could break up 100 million into two chunks of 50, and I think 50 million played right is generational wealth. That's what I think. I think 20 million. I think you're rich to 20 million. Well, let me see what you guys think. What are the lines in the sand? We ask this occasionally. What is the line in the sand for you? Where would you feel like is the border between rich? Okay, the bottom end. To be rich, you must be between X and Y. To be wealthy, you must be above Y, right? So what is X and what is Y for you guys? I'm curious about this. I always wonder too about these guys, like these economists and stuff, and they're mixing and matching with financial people, but they're not making any money. They're just on the sidelines analyzing while all these other people get wealthy. And you just wonder if that's got to make them angry. And maybe that's where some of this Krugman ire is, right? Like, I'm angry because everyone rich but me. I mean, I'm sure he gets paid his little money for his little luncheons and shit, but that's not scalable. Okay, so Chris, are you saying 5 million is rich, 10 million is wealth? Catherine, I'm guessing you're saying that up to 20 is rich and above 20 is wealth. I'm just guessing here. Let's see. Rich, 5 million, peace out, 20. Kurt, well said. Well said, Kurt. Yeah, I think that would be spectacular. Let's see. Craig has it at 6. 100, an extra 100 million. Dear God, Craig. Well, here's to hoping everybody reaches whatever your goals are. I want everyone to win, and we can, because they print money out of thin air every day. They just keep printing. They never stop. The water never turns off. Let's see. 10 million on the low, 50 million on the high. So you're saying, Dawn, 10 to 49.9 is rich, 50 and above is wealth. That's a good way to look at it too. I think 50 is wealth. I used to think 20 was wealth, but I don't. I think 20 million is rich. Because you can squander, well, we just saw a guy squander 100 million. You can squander 10, 15 million. So I think I would say 20 and 50. I would say 20 and 50 for me on that one, Dawn. Let's see, 25, 100. Yeah, 100's definitely wealth. You got 100, man. God, you got 100 million. 10 and 50, north of 10, 25 to 75, 2 to 5. See, I don't know, Mike. I don't think 2 to 5 gets you there. Maybe if you live in sub-Saharan Africa or in parts of Mexico near the Yucatan Peninsula or in, non-extradition areas in the Bahamian region, but I don't think 2 to 5 million is enough. I guess in some rural or provincial areas, not near major cities and not near major water supplies, maybe 50 million rich, 1 billion. Damn it, William. You have a high bar. A billion is wealth. You wealthy. I think 50 million you're wealthy. Maybe I'm wrong about that. Maybe we're going to have to change all this. 25 and 50, Joseph, I think I'm closest to being with you. Up to 20 million rich, 25 wealth with monthly income of 20K or more for money working for you. Well, God, if you have 20, 25 million, there's no universe where you wouldn't have 20K a month. That's not possible. Let's see. Rich is 1 million to 10 million. I don't know, 11. Oh wait, no, rich. This can't be right. 11, you have a gap. It can't be 1 to 10 million is rich and 100 million is wealth, because what you're saying is that 1 million to 99.999 million is rich. Anyway, this is an interesting thought experiment where you kind of decide, well, where would I be happy? Okay, that's the next question. Would you be happier here having an extra $50,000 a month, okay, $50,000 a month, or having 10 million in the bank? What would you rather have? Remember, all bills paid, an extra 50K a month, or 10 million in the bank? So, and you could do with that as you please. 10 million in the bank, 50,000 extra a month. What would bring you guys happier? What would bring you guys happier? What would bring you guys to a more happy state of being? 50K a month, 50K a month. Isn't it interesting? So I think I tend to agree with you. I think having the extra money per month, I think, is quite valuable, especially because if you have an extra 50K, that means you can invest 50K a month. Now, the correct answer is if you can invest, if you have some investment competence, then your $10 million is probably going to work out better, because let's face it, you could take your 10 mil, you could park it in treasuries, you could get 4.5%. That's $450,000 a year right there. I mean, just doing nothing, just parking it in government debt, the dumbest, most brainless way to do it, right? And your 450K divided by 12 months, you're getting what, extra $43,000, $44,000, $45,000 a month, and you're not eating away. So obviously, when you math it, it's almost the same, isn't it? But you'd rather have the 10 million in the bank and then go invest it rather than the 50K a month, which again, you could invest, but then that's not gonna leave you that nest egg. Anyway, I'd be happy if I could log into the class, buddy. But you're here with us. It's here. We're here now. It's me and you, buddy. It's me and you, guy. Me and you, guy. Grooming. What kind of grooming? The Shia LaBeouf grooming? Didn't he like try to get some girl when she was like 11 and then like until she was 18, like, Shia's the king. You know Shia's the king, right? Shia's the king. And then she's 18. She's like, Shia's the king. Let's move in together. And then he got in some bar fights. I don't know. That guy's got some stuff going on. He like hit someone with a chair. Like, don't hit someone with a chair, buddy. Give him a headbutt. Elbow him. Something. Don't use a chair. That's cheap. Could you please go over the options only membership? Because there are people that are not interested in specifically being in digital investor. There are people that are mainstream, normal equity people. They don't give a crap about crypto at all. They just want to make money in options. So that's for those people. They can just do the options, but we want to entice them to learn about the crypto space. So you'll see that it makes more sense. It is more discounted to do both the options and digital investor all in one bundle rather than just the options. But if you just want to do the options, by all means, you can just do the options. All right? So that's that. And the embedded link didn't work. Get with Brandon, but I'm sure, well, who knows? I don't know. I haven't clicked any links. I haven't seen the email. I didn't click it myself. I didn't click the email myself. Yeah, 11.99 depends on how you deploy it. Yep. How does that work out, the devaluation? Well, it's the same. For the sake of that question, it's the same difference. If you make 50K a month extra, how does that work out with the devaluation of the USD? It's same. Because if we're talking in terms of dollars, that's our unit of account, right? If our medium of exchange is dollars, then the fact that those dollars may lose value to devaluation makes no difference in the actual number that's in the account, right? I have 10 million of those units, and those will bring me $450,000 to $475,000 a year of more of those units. Or you have 50,000 of those units. All those units are getting debased. Same way the body burns calories, right? All at once. Same way a snowman melts, all at once. It's not just one snowflake that melts, the whole thing. So debasement is the way a snowman melts, all of it at the same time. So why these people that are tracking money supply, and there's such a sharp correlation, it appears, between money supply, kind of global money supply, and the price of Bitcoin. It makes sense that would be the main metric that people might be pegging off of. If you print more currency units, you devalue all the currency units, things priced in currency units have to go up in terms of currency units, right? So the egg example, you have 12 eggs, you have $12. Every egg is $1, $1 an egg. If you have printed $1,200, there's still only 12 eggs. Eggs haven't become any more valuable, but the price is now $100 an egg. The only thing that happened is that the money supply increased and you debased the per unit price performance of the unit of exchange, right? The unit of account, the medium of exchange. So, yeah. But so devaluation wouldn't favor one or the other. Now, there are tips in the inflation protected securities, but that's based on inflation metrics and like this kind of CPI measuring and stuff like that. That's not based on debasement. There's no debasement kind of treasury, debasement protected treasury securities. That just doesn't exist. It's too bad, because that would be a good product. Can you imagine? Things would skyrocket. Shai converted? What did he convert to? Let's see. Will I continue to talk about options trading? Yeah, I'm going to keep talking about options trading because the value of the education is important. You guys still, even for the people that do that and they get exposed to the actual trades in real time, I'm going to say, this is what I'm doing. This just happened. But you guys still need to learn the theory behind what you're doing. I was explaining to a friend last night, like it's relatively easy to make these trades. You got to go slow because you can do it wrong, especially on your way out. A lot of people forget that you're selling first, buying second, rather than buying first and selling second. And so that they'll sometimes sell an asset and then they'll go and sell it again, thinking that they're buying it back. No. So when you're selling puts, you're selling first, buying second. When you're rolling, the whole transaction is I sold it first, and then I'm doing a two-part trade where I'm buying back and selling immediately. So I sold, I bought, I sold. And then you have a contract that's rolled to another strike price or the same strike price at another time. Yeah, so there you go. Makes sense? And you can roll in every direction, sideways and up and down. Yes, we still need to focus on the why of what you do. There's a lot behind the why, right? Oh man, if you guys, anybody you guys know what Home Aglow is? It's like this service where it's kind of like Airbnb, but for people that will come and like clean. And I have wood floors, and I'm kind of like, I was like nervous about kind of cleaning them. And I was like, I don't really know what I'm doing. I'm going to hire somebody that's good at cleaning wood floors. And this person came over and she kicked ass like 5 hours straight. Floors clean, so clean, like wood floors. And it was like $70. I'm telling you, she worked a lot. So for those of you that have if you have like a daunting major house cleaning thing, again, we're not sponsored by them. I don't know nothing about nothing. We don't have sponsors, but go look up. I saw it on Instagram and I just clicked in. It was like $79, clean your whole house. I was like, oh, hell yeah. Wait till they get here and realize what they undertook. So, but then you do it by the hour or whatever. Anyway, Home Aglow. And you just kind of like sign up, and then I'm going to have them come like once a month. And it'll be the same person, because you can pick the same person. So they kind of, them, and they've all been background checked and everything. It's pretty dope. Pretty dope. Okay. So yeah, here we go. All right. So let me finish up here. Basically, the SEC is calling for this public feedback, and that's bothering a lot of the old school SEC folks. So they issued it Monday, which follows. So this was yesterday, and they've been kind of asking questions about in-kind redemptions and about staking inside ETFs. This doesn't be a big deal. Currently, you own the Ethereum ETF, you don't get any staking. I mean, depending on how you've done it. If you take your Ethereum and you wrap it into wrapped, staked Ethereum, and then you post it as collateral, and then you borrow against that collateral, and you take that money and you buy Ethereum ETFs, you effectively have staking. You have staking. But why not have your cake and eat it too? Twice. Have your cake and eat it twice. Like the Romans, like throw it up and eat it again. Can you imagine? You eat cake, you throw it up, and it's a perfect cake again, and you can just eat it again, minus all the stomach butter. Ooh, that's what I'm talking about. Birthday cake twice. Anyway, so there's some of the people observing this were frustrated because they're like, they're walking back all the work that we've done for years. And anyway, but institution of proceedings, this is what they said, the SEC wrote in the notice, is appropriate at this time in view of the legal and policy issues raised by the proposed rule change. Institution of proceedings does not indicate that the commission has reached any conclusions with respect to any of the issues involved. But what I would say is this is a pro-crypto SEC. This is not Gary Gensler's time. This is not Stark's time. This is a pro-crypto era. Those old fools are going to just go to the sidelines, go stay with the analysts, go hang out with Nuriel and his 5 women, and like go do all that. Stay on the sidelines. Let the adults invest. Let the rest of us carry forward. So anyway, the commission is now giving the public 21 days to submit written comments, data, or arguments for or against allowing in-kind transactions for BTCW. The period of this kind of opportunity is, it allows retail investors, Joe Sixpack, institutions to, pundits, advocates, the Krugmans of the world, everybody can say their piece. So cool. Say it. Anyway, we'll see where that goes. I think in-kind redemptions, it'll just be squaring away the custody and all that kind of stuff. But I think this will happen because you can do it in the gold market. You can do it in the silver market with those ETFs. Why shouldn't you be able to trade a commodity ETF for the underlying commodity? Makes sense, right? And this is a lot easier than giving somebody some damn gold. So anyway, currently most approved crypto ETFs, including BTCW, operate under a cash creation and redemption model. And this means that when an investor wants to redeem shares, they receive US dollars rather than the actual underlying asset, like Bitcoin in this case. But if there were in-kind redemptions, it would allow investors to receive the underlying asset, which is a key feature of many current ETFs. Like I said, it's like you get tax efficiency for investors through the avoidance of taxable events until the sale of the underlying asset. You lower transaction costs by minimizing intermediary conversions between Bitcoin and USD and all that sloppy shit going on between your banks that want to sit on your money because they're a bunch of idiots that don't loan anymore. And even if they do loan, they're loaning your money and they're pocketing the money and then telling you to F off. God, I would love to know how much money in interest has been generated on my money sitting at Chase that's been relent 94 times or whatever. There's, whatever the reality of that is these days. Very interesting, my friends. Anyway, The SEC has long been hesitant to allow in-kind redemptions for crypto ETFs. Well, for the last year, because there's only been ETFs for a year and change, due to concerns about custody, market manipulation, regulatory status of crypto native infrastructure, yada, yada, yada. Okay. I think that goes away. Wisdom Tree launched their spot Bitcoin ETF in January 2024, right? It was one of the spot products approved after years of rejection by the SEC. Its approval was seen as a landmark event following Grayscale's legal victory over the SEC in 2023, which compelled the agency to reconsider its hardline stance on spot Bitcoin ETFs. Even Gary Gensler had to get out of the way of this one. He was stuck because, law. So the current debate over in-kind redemptions is likely the next major battleground in the maturation of Bitcoin ETFs. That's cool. Now, what would happen if this happened? If this goes through, should the SEC approve these in-kind redemptions, it would likely set a precedent for other issuers like BlackRock, VanEck, Fidelity, ARK, well, all of them, who have expressed interest in similar capabilities. So everybody's watching this one, and if Wisdom Tree gets across the finish line, then they'll all submit the rule change and it will all go into effect. But the implications of all this go well beyond just Bitcoin. So you have Ethereum ETFs, which are still under review, which could benefit from the framework set by the outcome of this, potentially enabling physically settled Ethereum ETFs. So that could be interesting, right? Then, and of course, Crenshaw and John Reed Stark and all these other douchebags that no one really listens to. Anyway, no one listens to these guys. Even when they're on CNBC, you just kind of mute it. You're like, let me just read the blurb because I don't really want to listen to him pretending he's still relevant. Like, why do these bureaucrats that are no longer in office think that they're relevant? They weren't relevant when they were bureaucrats. They're not relevant now. Like, no offense, but John Reed Stark, shut the fuck up and go away. No one gives a shit what you have to say, and you have no power. You have no teeth. You never did. You were a pussy when you were at the SEC. You're a muted pussy now. Like, what are you? Shut up. These people, at least Crenshaw's criticisms come because she's a commissioner. She's an idiot, and she's probably about to be fired, but she's a commissioner, at least an acting commissioner. So anyway, but John Stark wrote, "This is how the SEC dies in plain view. It's a shameful abdication of its investor protection mission and a betrayal of its proud 90-year legacy." Oh, yeah, really proud legacy. Like everything under Gary Gensler was just spot on. Like the fact that the SEC knew for 8 years while Bernie Madoff ran his Ponzi scheme and didn't even indict him for 8 fucking years. Boston SEC brought the case to New York, presented the case, and it took 8 fucking years for the SEC to shut down, at that time, the biggest Ponzi that had ever existed. Get the fuck out of here. So any of these the proud 90, there's no proud nothing. No one, there's not one person on earth, I don't care, even if you work at the SEC, no one at the SEC, no one outside the SEC says, what a proud organization we have here. This Securities and Exchange Commission. Oh, nearly 100 years of debt. Bullshit. No one has ever thought that. It's beyond ridiculous. Stark emphasized in his murmurings that the SEC's new position directly contradicts federal court rulings in high-profile cases against Binance and Coinbase. No, dude, because the rulings were based on the SEC guidance, and the guidance was illegal. This is what these guys miss. They say a bunch of shit. A bunch of people come in and clear up a bunch of shit and say, oh, you couldn't say that. The judges don't make law. They interpret. Guess who else doesn't make the law, John? The SEC doesn't make law. Congress makes law. Stupid fuck. These guys, they get their heads get so fucking big. Anyway, maybe they should spend less time looking at the proud 90-year tradition of the SEC and go read some fucking case law. and learn how the legal system works. Anyway, while the Coinbase case had been allowed to proceed in March 2024, it was later dismissed in February of 2025, a shift that saw the foreshadowing as the SEC's new kind of guidance took shape, basically unwinding all of the bullshit that happened under Gary Gensler. And so the SEC's lawsuit against Binance staking program was dismissed with prejudice, meaning they can no longer, remember, with prejudice means they can't come back and retry it. They can't relitigate this. They're out. They're free. They're done. Good. So it's a pretty symbolic defeat for these regulators of the past, of part of that great tradition. And also, John, why don't you not apply 1934 fucking rules to 2025? It's like, is there any set of rules or regulations from 1934 that apply now to us, the way we live our lives now? I mean, anything other than thou shalt not kill? That's about it. Even the one about coveting thy neighbor's wife, I'm not sure that makes it these days. There's a lot of coveting going on. You walk around the neighborhood, there's some coveting going on. A lot of coveting. Anyway, that was 10 Commandments, but you know what I'm saying. Anyway, the regulatory turmoil is not limited to just external voices like John, but also Commissioner Caroline Crenshaw, a single sitting member, issued a sharply worded dissent. I'm going to issue a sharply worded email to the May 29th guidance, arguing that the new interpretation does not align with legal precedent. She doesn't like the idea that they don't make law either. The staff's analysis may reflect what some wish to be the law, Crenshaw said, but it does not square with the court's decision on staking and the long-standing Howey precedent, which is based on an orange farmer in the 1930s, man. Anyway, Crenshaw warned that the SEC's recent actions are part of a broader trend of policy inconsistency. Yeah, because the SEC was a fucking joke, and it's being fixed from the inside. What do these people expect? I mean, do you think she's on the phone every night with Gensler? But Gary, you wouldn't believe how they repainted the office. You wouldn't believe the color. Like, shut up, bitch. God, all of them. Anyway, her statement echoes concern that the agency is attempting to rewrite policy through enforcement discretion. Yeah, well, before they were using enforcement to write the law, to create law, right? They were just using enforcement. Period. There was nothing else. There was no discussion. You went in to talk to the SEC, they'd say, our door is open. You go in, they're like, you're indicted. They're like, motherfucker, I willingly came in here. They're like, well, you just willingly been indicted. Yeah, damn, they got me. Anyway, she believes this could lead to a regulatory vacuum where market participants are left to guess what rules apply. Yeah, until Congress, which is the way it works in the United States, creates a rule structure. That's how it works. Anyway, over the past 6 months, the SEC has dropped what many in the industry see as a bunch of frivolous cases, but they have turned to a kind of a deregulatory posture, right? And the agency has hosted multiple closed-door roundtables with industry stakeholders aimed at creating a more collaborative rulemaking environment, unless you're somebody from Ripple, in which case they just don't have time to have meetings with you. Brad's like, hey, let's have a meeting. They're like, nah, man, you're a fucking creep. You're a thief. You got caught. You weaseled your way out of it, but we don't really, there's nothing for you here. We don't care what you, no, my friend, no, I'm sorry. I'm so sorry. So critics like Stark and Crenshaw describe this shift as a crypto deregulatory blitzkrieg, a rapid pivot that not only contradicts Gary Gensler's SEC, but prior agency enforcement actions, but also risks undermining the SEC's credibility. Does anybody here think the SEC, just a simple yes or no, is a credible organization? Does anybody here think the SEC is a credible organization? Anyone? Anyone at all? Just anyone? Maybe one of you does. Maybe one of you's like, yeah, the SEC, they keep us straight. They keep things going. Anyone? Come on, man. It's so stupid. So anyway, yeah. So great. They're making some changes. Where I was interested is the idea that some of these adjustments might affect staking, especially in the Ethereum ETF. So I think that's a pretty big deal. Right now, yes, companies are kind of in a regulatory limbo-ish. They're kind of unsure whether future products involving staking, like staking as a service or validator pooling or liquid staking tokens, will they require registration? Will they not? Will you be able to own an Ethereum ETF and get staking rewards? Will you not? Like, how would that work? And what would require registration? What would trigger enforcement? What would which way? These guys don't know whether to shit or wind their watch. You know what they do know? That at least at this point, this administration and this SEC, so Sands, Gary, and John, and all these other dirtbags, this SEC wants America to kind of grow, and they don't want to punish businesses for coming in on an open door policy only to get regulation through enforcement. I'm pretty sure that's not what Congress meant. So anyway, yeah, there we go. So we have this shifting regulatory landscape. It is creating, everyone's favorite word right now, uncertainty, unpredictability. No shit. That is life. If any of it was certain and any of it was predictable, everybody would have all the money. Everybody doesn't have all the money. And you can even argue that there's not one person that has certainty and predictability, or they would have all the money. And there's not one person that has all the money. Therefore, there's always degrees of uncertainty and significant slop and murkiness. That's the world we live in, man. Let's see. Well, the Monday, Wednesday, Friday thing is cool because it's more about like getting to brass tacks. On the Tuesdays and Thursdays, I get to wax. Man. I get to wax. I don't know when compute starts. The only people that know when compute starts are the people working on all that. So I don't know. I wouldn't do anything. You don't need to do anything with your node factor right now. Just wait and see. I have a bunch of them, but I'm not doing anything. I'm not tilling. I'm not nothing. I'm going to wait and see where, what, when, why, who, how. I don't care if I'm a month or 2 months late. Makes no difference to me. In the long end, I'll be fine. So I got a lot of them. So I'm just waiting. Okay. Finally, I did want to talk about, so this guy, Samson Mow, he's pretty cool. Of all the talking heads out there, the Bitcoin talking heads, he's orange pilled, but he's not a wacko. He's not like Sailor, right? So Samson Mow is a little bit more palatable, in my opinion. So I read through an article where he was just talking about some of the things. Like one of the things he mentioned is he thought it's absurd that the U.S. government hasn't started accumulating Bitcoin yet for their strategic reserve after they gave the rest of the world the blueprint. And now you even have companies like India and Pakistan. Like Pakistan, the head of Pakistan's crypto council, Bilal bin Saqib, I think that's right, announced at Bitcoin 2025 in Las Vegas on May 28th that the country is moving to establish a strategic Bitcoin reserve. He said that we want to thank the United States again because we were inspired by them. Pakistan is putting together a Bitcoin reserve inspired by the U.S. and the U.S. hasn't even started filling that damn thing yet. And so Mao was questioning. He's like, why have we not started doing that? I mean, he said there's all sorts of budget neutral ways. You could sell gold, right? Like you could have been selling gold to accumulate Bitcoin. The U.S. has the largest gold reserve in the world. They have 8,133 metric tons in its possession. So Mao said, hey, man, why don't you start selling and rotating out of those gold ETFs like institutional retail investors are? Do it right now. Right now. Anyway, he's a proponent. He goes around, he goes to all the events, he gives the talks, he gives the speeches. He's very pro Bitcoin. I'm guessing he's got a fair amount of it because he really got into Bitcoin in 2013, 2014. He edged me out by about a year and a half, but he probably invested harder than I did. So I have to pass him with education. I can't just sit there and let the number go up. But you know what? Those guys that are just sitting on Bitcoin, number go up. So you know what I would tell grandma to do? Get you some Bitcoin, because number go up. Because they just keep printing them currency units. Anyway, he said that basically he went on and on that the U.S. needs an accumulation strategy. Great. So about 50 million Americans currently own Bitcoin. He believes it won't be too long before that number doubles. The idea is, in his mind, is that Bitcoin is still undervalued. And so, again, the price is always right. The price is what it is because that's the price. That's the price is what two people just agreed to trade an asset for. But the value can be argued, right? Everybody has a different value proposition. So, this is kind of where we're at. What he said was, you have this FIAMO. We talked about that a few days ago. The fear I already missed out. He said that most people shouldn't worry about buying Bitcoin for pennies now that it's worth over 100,000. He goes, because if you price it in millions, right? Thinking that, he calls this his Zen perspective, that it was 0.06 million, then 0.07 million. Now it's 0.1 million. Soon it will be a million. And people think they missed the boat because they didn't buy Bitcoin at $1, but they often forget that a lot of people that bought Bitcoin at $1 sold it at $2, right? And even people that bought it at 10,000 sold it at 28,000 and 13,000 and 19,000 and 62,000. Some of them sold at 100,000 and they're out, and they'll watch it go to 6 million and they'll go, oh man, I left a 60x on the table. That, so Mao points out that buying Bitcoin now is still early because the trend is exponential. Why? Because governments will never stop printing, ever. So there is no FIAMO, fear I already missed out. If you think you missed out, you did. But it doesn't mean you can't get in now. And then 2 years from now, the people that are staring at you will think, oh man, I wish I got into Bitcoin at 100K. Oh, those were the good days. That's when Bitcoin was cheap. It always looks cheap after it goes up a double or a triple. And you look back and like, man, I'd love to get me some of that. I've had so many people like, man, I'd love to get me some of that $50,000 Bitcoin, when Bitcoin hit 69. And then it went down below that, went into the 30s. Oh, I'm waiting for 10,000. What are you waiting for 10,000? 2 months ago, you were waiting for 50. Yeah, I don't know, man. I don't know. You don't know because your heart sinks and swims and fucking dives with the direction of the price. Too many people are price emotional. You have to be a fucking serial killer to be good at this stuff. As far as your intelligence, your emotional intelligence around investing, you need to be just like a surgeon or the dude that does autopsies, a mortician. You need to be that guy. Is the mortician that does autopsies or just takes the dead people and does dead people stuff? I guess it's like I don't know. Maybe there's a specific kind of autopsy, surgery specific. But anyway, you have to be like that. Dude, investing is just cutting up a body. It's just meat. It's no different than squaring cubes of chicken to give to Kitty. You can't be emotionally attached to your investments. You cannot make competent decisions while your heartstrings are being pulled because the price is up or the price is down. No one likes to see their shit going down, right? And then if it goes up too fast, you're panicked because you think you got left behind. You have to disconnect all of that. You have to unplug the emotional side of your personality from your investments. And you do everything you can up until the point where you make an investment, and then cut that shit free. If you want to obsess and emote and be this kind of fucking visceral feeling creature, cool, up until the point where you make your investment. And then at that moment, it is out of your hands. It's out. And if you start getting emotional, fucking sell everything you have and walk the fuck away. Yeah, that's right. You nailed it, Frank. I guess a forensic pathologist. Yeah. So I guess what I'm saying is, do a little self-check today. And if you're looking at your portfolio, and it doesn't have to be crypto, just in general, if you find moments of emotion in that analysis, you are overinvested, bro. Invest down to the point where you are no longer emotionally charged. You should not have a rise. You just shouldn't, right? You do all of that stuff, all your angst and anxiety and all that is before you make the investment. But once you make it, cut it loose, baby. You don't have any control over any of these things. None. So don't try to imagine that you should have control over it. And when it makes you mad, get out. It's okay. It's also okay to get out. It's okay to get to the sideline. It's okay to sell. People are like, oh, diamond hands. Why? Sell some shit. Go buy a car. I mean, I don't recommend that, but I'm saying, do you. But don't be depressed. Because if you're depressed over your investments, you have a rough life. Because this is a good path. This is a good path to a lot of currency units. But if you're emotional about it, it is a path to needing a lot of antacids. What, Prilosec OTC or whatever? You don't want that shit. All right. Okay, so let's call it a day. There was one more question I thought. Oh, do you have a guess where Bitcoin will be in the next 5 years? I mean, I would figure it would be well over 1 million. I figure we'll take out 200 this year sometime. Yeah, I'm gonna say in 5 years. 5 years is a long time, buddy. 5 years is a long time. I think 750 to 1.5 million, I think, is a pretty fair, probably a fair range. I would be shocked. I would be shocked if we're in 2030 and Bitcoin's not over 1 million, just based on the printing of money. Bitcoin should probably be 1 million right now. If it's really pegged to like money printing, like it should probably already be 1 million. So, I think that's, and it's not a straight line, right? Like it's a bumpy path, but that's probably where we go. All right. Stay in school. Don't do drugs. Don't do anything by pouring solve a drunk, starting a meth grandmother, or Brandon wouldn't do, which is very little. Don't be emotional, man. You ain't got to be emotional. Don't be emotional.
Killing time, no place to go. Everybody's feeling low. All alone in the street like low. You fall into your head. It's all that you want. It's all that you need. Take some time to make believe. It's all that you want. It's all that you need. Just some time to make believe. It's all that you want. Killing time, no place to go. Everybody's feeling